Ladies and gentlemen, welcome to the SoFi Weekly. Today, I'm joined by the great and powerful Tevis from the Fundamentals of Investing podcast, a podcast we'll probably never listen to in our lives because he'd rather do the SoFi Weekly and other things around except
I
for the name
changed
that
I changed the channel name. The channel name is just Tevis now.
is it.
It is, yeah.
Oh my gosh! Thank God. Okay,
But
sweet.
like obviously the at on X is still the same, and the banner, and eventually it'll change. But the channel name is just Tevis now.
Yeah, but it fun of investing. You kind of picked one where you can go with anything. That is just fun. It is.
I kind of feel bad for reporting the Tevis channel now, just because I didn't know, man. No, I'm just kidding. I didn't do that.
And of course, the obviously doesn't even need an introduction. Roy, how you doing, buddy? Oh,
Good. Celebrating with the rare Celsius.
Maybe let's get it started.
This one is for you guys.
you got one too.
Tropical vibe.
Oh wait, are we running the full variety pack?
I got peach.
There we go.
I love how we're just fully unpaid sponsoring Celsius.
That was, by the way, like there was zero prep to that. I didn't know that was going to happen. That's so funny. That just shows you how common they're becoming.
Yeah, I haven't drank one in probably 5 or 6 weeks, but I bought one a day just because I was like, I want to be with the guys drinking one. One of the peach vibe. That one's really good. This one, yeah, it's all right. Tropical vibe, but they were out of the peach vibe. So
it is one of the best ones. Tropical vibe is S tier.
I posted a video earlier tonight, and one of the guys was like, I'm drinking a peach Celsius, but like he commented, and I was like, I'm going to drink one on stream later tonight just for you.
Yeah.
That's right. Cheers to that random person.
Cheers to them.
Just really quick, just because I'm interested and I want to talk about it real quick. Are you still making money on Celsius? What are you doing with your shares?
I cut a ton of my leaps, letting the shares ride. I really wanted to add actually, but it bounced back really quickly because it fell to 79 and then it bounced back up to 84 today. But yeah, I cut a lot of those leaps. Honestly, with the gains from those leaps, I was able to just start my entire position in CleanSpark with just Celsius gains and then transfer a bunch of them into shares because I started out with just leaps and I wasn't expecting to make that much, but I bought them and then Celsius blew up. It was $96 leaps expiring next year. And it just went to like 90 in a week. So as you can imagine, the leaps were insane. And so I just sold them and got CleanSpark and then transferred a bunch into shares. And it's a super small position, Celsius for me now, because I need to start building it in shares.
By the way, guys, if you make Tevis laugh in this episode, I coded in this new thing that will detect whenever Tevis starts to laugh, and it'll just make it a little bit more fun. So the more we can try to make him laugh, the better the show is going to get. I called it. I told you.
Greetings to all earthquake survivors. Okay, stop, Tanner. Get me off.
Hey, it's not me, dude. It's automatic. Anyway, so let's talk about some SoFi. We have some fun news today. Different analyst reports, maybe a little bit of Cathie Wood in there. But first, I want to bug Roy. Roy, you've been a large proponent of Robinhood. They recently just put out this amazing credit card. SoFi had enough of people talking exclusively about Robinhood's credit card. So SoFi actually bumped up their cash back by 10%. So it's now 2.2%. Is that enough?
I mean, some people will love it and absolutely use it. The main thing is their charge-offs are getting better, and that's what they have to fix. If it doesn't matter how many credit cards they have out there, and the same goes with Robinhood, is if they are losing money on it, you don't want that in people's hands. And so I think that they're fixing that. That it'll attract a few more. It'll keep a few perhaps from going to Robinhood while they build up that product, and we'll see. If Robinhood's product, if it can at least be cash neutral, if not make them some money. But yeah, I mean, it's nice that they upped it. I think that they can afford to do that as long as they're managing that risk.
Tevis, stop going in chat. You're gonna laugh again. You're gonna end up
What was the
sharing it.
question?
The SoFi credit card, 2.2% cash back, 3.3% on travel,
Yeah,
27.5% at SoFi Stadium.
Yeah, look, I mean, I think it was good that they had a response. I also think it was good that the response was not so overblown that they're going to put their profitability in jeopardy. Not saying that credit card has any profitability to speak of, but they're growing that out actively, and so it's good enough to be competitive. Not to mention that SoFi it doesn't have fees for their card, right? You have to have the checking and savings, but they don't necessarily have fees. Whereas with the Robinhood, you would have the membership on top of that, and so there is some. I mean, you could argue there's some unit economics there, especially with what you're going to use the card for. It makes it more dynamic of a landscape for a consumer. It's not like a clear cut, victory for Robinhood. They're competitive, and that's exactly what we want to see. We don't want to see Robinhood just cannibalize all the SoFi credit card potential leads. Number one. Number two is it seems as though they're making a more active push for members because they're pairing this with the other referral bonuses, with direct deposit bonuses that they're providing. And so I wouldn't be surprised if this translates to more members this quarter, next quarter. You've got to remember that, and I mentioned in a video earlier today that this type of stuff compounds. You have the NBA news, you have all of these different promotions for credit cards, for all of their, different segments. They are offering benefits for you to join, and it is to capture that user in that wider ecosystem. So that's all going to translate to members as early as this upcoming earnings report.
Yeah, I think that it's a good thing to do. Remember, I don't think that the Robinhood card is 100% proven yet. We don't know how that's going to go for them in terms of profitability. For SoFi, they do have a really good understanding of how that's going to work for them. And so far, it actually hasn't been working for them very well. But in terms of their cash back, it's not going to make a big difference. They need to worry about their defaults. That makes up for a much larger percent. The difference between 2 and 2.5% on their, cash back is not going to make nearly as much of a difference as the 18% defaults that they have on their credit cards. So, if they're able to actually underwrite a lot better, you can pay for a heck of a lot higher cash back and potentially be the second best card on the market and maybe the only proven one.
Yeah, and you don't have to have the best rates. I mentioned this before. I'm a Robinhood bull, but they don't have the best rates out there as far as most of their services. Webull actually beats them across the board, and yet there are not, as far as I can tell, people flocking to Webull. It's actually going the other direction, and so you can have just be in the ballpark and then give people that freedom of choice. And some people will absolutely prefer SoFi, even though it's 2.3% and not 3%. I still think Robinhood is better on that card, but maybe not better for Robinhood, and it may not be sustainable. We could find out, in 2 quarters, like, hey, it's got to go down to 2.5% or 2% or something like that. So we'll see.
I was just going to state that. So Webull and Robinhood have been a little bit different, chosen not to work as closely with the big clearinghouses like Apex FinTech, for example. And that has potentially allowed them to offer better services like $0 inactivity fees and all of these things. Do you think the change from 1 year to 6 months is any news? And why did they even do it in the first place?
I just don't love it. It's not a great signal that they're sending out. Like, I understand the unit economics of it, but just eat the fee, man. It's just not, it doesn't send a good signal telegraph to the market. Like, as a consumer, that turns you off like nothing else. And especially because it goes so much against that brand value that you're trying to, get that mission statement for the company, right? I don't like it at all.
Yeah, you could easily do it the other way, just because if there really is a fee that they'll have to pay, something legally that they have to do, just give them some rewards points and then remind people. And it doesn't have to be 6 months, but you're like, hey, if you sign in, you'll get this, and hey, don't forget you're about to miss your rewards, and hey, last chance. And you can send out a number of those announcements, and ultimately, if somebody doesn't do it, you can make it much longer. Right? Is it a year and a half? That it's actually, but whatever it is, like, you can do it at that point. But 6 months is just probably people will be signing in there, but don't do that. Like, don't nickel and dime people. People hate that. That's why they go to SoFi.
I think that there's 1 or 2 states that's at 2 years for the escheatment laws. The majority are at 3 years and some are at 5. So I don't get the Anthony Noto actually. Oh, sorry, it caught your laugh there. My bad. I'll have to tone down the. Yeah, it does work.
Such an asshole. Fuck off.
Oh, and big swear. I got all the buttons, dude. I have all the buttons.
Did you actually hotkey a button just to put me on screen?
Yeah, it says Tevis on it, and I just have to press it. And but now I can't press the letter T on my keyboard. So everything that I type, it's either going to zoom in on your face. So, but yeah, I can't even. I wish I could code it for Roy. It won't even pick up on his laughing. Anyway, so I was just going to mention with the escheatment laws, I just don't know the difference between the 1 year and the 6 months. Anthony Noto actually replied and said, "Well, this is just a sort of a legal concern, and so we chose going the inactivity fee route because it's the one that kind of gets the highest response." But I don't know. Whenever making that change, you had to send out an email to all of your invest accounts saying, "Hey, we now we're expediting this charge if you're inactive for a sooner amount of time." And it's like, why even change it? Because now you're just allowing people, you're giving more gunpowder to something that shouldn't even be a thing to begin with.
Yeah, but look, if you do the math in terms of how much are they going to get in terms of revenue for this 25 versus how much they're going to lose in terms of people being pissed off, I would struggle to find the unit economics that makes it a viable option for them. Like, you're going to get $25 out of everybody that's going to be super pissed off the moment they find out that they've been charged an inactivity fee. Dude, my bank can charge me $5 for some random fee, and I'll get like more pissed off than, it's ridiculous. Like, fees are such a legacy thing that it's not emblematic of that SoFi brand, right? And so I just don't understand the approach with it.
Yeah, I same way. It's not about it's a principle for a lot of people, and I'm one of those that if I feel wronged and I'm like, hey, this shouldn't be a thing, that will cause me to spend an inordinate amount of time. I had this disagreement with something that actually owed me $120. Like, no big deal, $120. I probably invested a good 20 hours in a dispute with them. And it's not worth the time. But I was like, I had the time at that point, and I'm going to do it because I'm that petty as far as when somebody wrongs me. So, and they did not like it. They actually, I won't go into the whole story, but there are people like that, like Tevis and I, that will absolutely be like, hey, it's $25 or whatever, but we don't care. It's not about that money. It's about the principle. We don't feel like this should have been done. We're gone.
Can I butt in real quick? Sachin, DM me real quick. I'm going to send you a link if you want to join up. If you like to talk some SoFi, I'd love to have you on, man.
Join us. Yes.
I just can't send him a DM because he has his DMs closed, but I'll just send it in his most recent. Actually, I can't just send a public link.
People are going to show up.
I have stocks in Leap's position build up on this dip. Was eager to, so jumped in early. Jump on. Let's talk about it.
Yeah, come on, man. Yeah. Friendly to Palantir bulls, by the way, because I am one. So nobody's going to say anything bad about Palantir. We're just going to love on you because you love SoFi now, at least for the Leaps.
Yeah. And we can kick out Tevis if he starts talking poorly about Palantir.
You don't even own it, Tanner.
I mean, I've got so many different positions. It's not that I don't want. I would love to, but it's
you used to own it at one point. What happened with that?
The way my account works, I've got things over here and over there. I'm a massive bull. Bull.
Right.
Stand down, bulls.
Right.
With Sachin, let me just say something right there. So, he has quite a position there. I talked with him on X a bit, and this is for him just a trade, at least at this point. He seems like a guy that is always open to changing his mind or going long in something. Next week would be awesome. But he is not the only one that I'm seeing in my circle that aren't usually interested in SoFi. There's a number of Palantir bulls, and some have messaged me actually privately and have said that they're actually in SoFi. They're seeing it more as a trade, but they're seeing a lot of opportunity. They're seeing that it looks cheap to them as well. And so it's just interesting that a lot of folks, doesn't necessarily mean anything, but a lot of folks that normally wouldn't be in a stock like SoFi are like, hey, this is an opportunity. It's too good to miss. I'm in. And they're not like Sachin's probably bigger than most, but these are not small amounts that people are putting there. So it's interesting.
Yeah. Yeah. Speaking of other, large bulls lately, Cathie Wood buying up like crazy. How many shares is she at right now, Tevis?
Over 15 million.
Over 50 million?
15 million.
Oh, 15. I was like, geez, I have not been paying attention.
Here's the thing. Back in January 30th, 60 days ago, or, somewhere in that range, 60, 70 days ago, she had about 1.8 million shares. And throughout the last 2 months, that's gone up over 8x. She has over 15 million shares. I think she added 500,000 shares this week alone. So it's top 10 in ARKF right now. It's going to be top 5 in ARKF if she keeps this up for another couple of weeks.
Yeah. Yeah. It's her, top 10 position in her ARKF fund. It's even growing in her ARK fund, which is the main innovation fund that she has.
Which is interesting because it directly correlates with the, the ARK private venture fund being on SoFi, which happened mid-January. And then all of a sudden, in mid-January, she had about 1.2 million shares, something to that effect. End of January, 1.8, and then she just started plowing money into it. Around that same time was the MBA deal. She had her interview with Noto in February, and on she went.
Now, probably the biggest piece of news this quarter, aside from Q1 earnings results being announced, by the way, April 29th, which I'm going to be away. So Tevis is going to be 100% liable and responsible for hosting the live stream, making sure that the sound quality and all that stuff is good. We're relying on you. Okay.
Yeah, if I wake up in time.
Yeah. Jeez.
Drink one of these, man. Come on.
Yeah, he's going to be dual fisting. But sorry, it was slow. My bad. Okay. Needham and KBW just changed their price targets on SoFi. What do you guys think about this? Needham initiated a price on SoFi of $10 per share. Okay. They said that this was a sum of the parts style of analysis, which means they broke it down into each individual segment. They put a price target on their lending segment of $8, and then the technology platform and financial services together of just $2 per share, meaning $10. Do you guys think that that's a fair weighting between these companies, or between the segments of the company? $8 for lending and then an additional $2 for the rest?
Obviously not. If 50% of the revenue is coming outside of lending, you should probably give it a little more weighting, especially because that's where the margins really will be in the future. But I did love, I did not only love having more analysts actually analyze SoFi. These guys actually broke down the individual segments, which I think is something that any investor should want, just to kind of figure out, like, okay, are they just pulling this number randomly out of their hat? And I mean, most analysts do. Let's be honest. But it's nice to see like some value at least being placed on tech, even if tech is not all the way by itself. So, but I think that dramatically underappreciates tech. But it may kind of help us give it a glimpse of what the market actually views the tech as worth. If it's worth anything, it's like, $1 or $2, along with the financial services. So it was an interesting analyst note, and I appreciated it, even if I'm like, hey, should be higher.
I mean, I think that the fact that you say that is true, right? Like $1 or $2 for the tech platform is great. And, tack on the financial services. I think that the financial services segment is going to be one of the strongest segments of this business, like bar none. The margins on that on a quarter over quarter basis have been just skyrocketing. That's where all the growth is going to be. Like that's the 2024 Like, that's where the growth is. 75% growth in 2024. And they're giving this the smallest price. I don't get it. Like, $8 for lending. This is the segment that's supposed to contract a little bit. Now, they know that that's going to be the case, okay? And they're still placing it at that $8 mark because a lot of money and high margins can be made on lending. But financial services, I just think that they look at it at such a small perspective of the business, not seeing the growth rates. All the members that are coming onto the platform, the high customer acquisition cost that we're paying for is because of financial services. I would not sleep on the direct deposit users. Sorry, go ahead, Roy.
Oh, yes. And I was going to say, like, the great thing about this is we know that there's at least one analyst that's looking at these multiple segments. And so when they look at the next earnings, this month, they'll see and be like, okay, is it really fair? And we don't know, like, of that $2, what goes to what, but is it really fair that we're putting this little value on? And so it leaves room for a pretty fantastic price target upgrade, which honestly, like I never really understand fully why like price target upgrades or downgrades, why the stock reacts it is. I know it's a lot of algorithms. It's still silly to me. Whatever, the business hasn't changed, but as upgrades come, that helps stock price action, and we are very low right now. So, and there's a few shorts, just a few out there.
Tevis?
Yeah, I agree. I think I wasn't really listening, but I think assigning the $8 Tanner, get me off. Okay. I think assigning the $8 and the $2 split won't really make a huge difference. I really don't care because at least directionally, it's above where we're trading right now. It's a buy rating. Do you know that SoFi has 18 analysts that have coverage? 10 of them are neutral, 4 have a sell rating, and only 4 have a buy rating. Like, who really cares whether this person assigns $8 or $9 to lending, even though it's going to be flat, and whether they assign $2 to tech platform? Hell, everybody else isn't assigning jack shit to the tech platform, right? And it's still something that's growing, something that's going to contribute like what, 80, 90 million in revenue. It contributed recently over the past couple of quarters. So they're taking into account the tech platform. They're taking into account the bank charter, and they're still having a buy rating that's above the range of where we're trading. Yeah, I'll take it. I'm not really going to fuss about it.
I mean, they're doing a $2 price target for both technology platform and financial services. I don't even know if I would put just a $2 price target on financial services without the technology platform. Like, it makes up for 40% of total revenue. That revenue is, I don't want to say risk-free, but essentially it's no risk to the balance sheet to grow financial services and to grow the technology platform. Lending is the risk, right? Especially with default rates and potential jobs reports. If it does turn sour, that wasn't the case today, but if those sort of things do turn around, that's the stuff that could hurt SoFi's bull case. The financial services and technology platform, no one has anything to say there. There's no credit risk.
Yeah, nobody has anything to say there because they're all like traditional dinosaur analysts that don't understand that aspect of the business. And all they look at is they look at the capital ratios and they look at the like lending side of the business specifically. Nobody gives a shit about the financial services or a technology platform because nobody understands the potential of Galileo. So that's why they have nothing to look at there. Not necessarily that they, understate it. They just don't understand it.
Well, it's not just that they don't understand it, they don't attempt to understand it. Like, that's
Right.
even worse. If you're an analyst, I understand you have to do your job and you have to cover, I don't know, 30, 40, 50 companies, so it's hard to know that in detail. But if it's a core proposition of the company, like, you need to at least spend a little time trying to understand Galileo, and it's really not that complicated. So it's absolutely ridiculous. I'm not even going to mention his name, but that a certain bear that you spoke to a couple of times, Tanner, really has made no attempt to understand that core proposition of SoFi. And if it's meaningless after he looks into it, fine. He can come away with that. But to actually say, hey, I'm not even going to look at that, that's utterly ridiculous. That's preposterous.
I mean, I don't see how I don't want to be as, I don't know if you call it bearish, but I don't want to just pigeonhole it to say these are dinosaur-like analysts. There are analysts for tech companies too. There could be someone that could pull apart the
Yeah, name one analyst for a tech company that's covering SoFi.
not that's covering SoFi, but I'm saying why aren't they? Like you know?
They're seen as a bank, bro. That's why.
But what about before that? So you're saying all the analysts,
What do you mean before?
switched out?
Do you understand the analyst from Schwab Network literally called Galileo Gemini this week?
I saw that. I saw you share that. That was ridiculous.
Like these guys are so out of it, and he went along with that same exact narrative that this is a student loan refinancing company, and now they're getting into auto loans. And I was like, what is this guy saying? Like there is such a disconnect. There is such a disconnect between these analysts and what the actual consensus is of what the business does. And then 10 layers deeper, the stuff that we're doing of going line by line on Noto's comments and nitpicking, what the 2026 consensus is going to be and working backwards from there to understand that this is undervalued. I hate you this stream. I honestly do.
I'm not doing anything. I'm not doing anything.
This is going to get old really quick.
Well, it's not getting old for me. I am loving it, and so is the audience. So, okay. Now, I do agree that that there are some older, heads looking at this, but I think that that's the alpha. If you can see past all the crap of saying, hey, you know what? Tesla isn't just an auto company. There's a whole tech side to this. There's a whole energy side to this. That's your alpha. That's where we find great investments. If they did fully understand the business, then these $10 price targets or $7.50 price targets would be much more impactful in my view. The fact that they call it Gemini on live TV and forget the name and say that we're getting into auto loans and all this bullcrap, that is who's reviewing the company. Okay. Regardless of what analysts say on TV, that might affect the stock price right now, but it's not affecting the fundamentals of the actual company. So SoFi is still going to grow. They're still going to reach out, get new members. Financial services will continue to boom, and hopefully lending still continues to grow. But that is, that is the alpha.
I just wish if they're going to get it wrong that they get it really wrong and just call it Copernicus or something like that. But I mean, they couldn't even do that. So
Gemini. They label us with a freaking. Isn't that the
Google thing?
Oh no, but isn't that the who's the two twins that tried to do the Facebook thing? Isn't that their crypto platform?
Oh, the Winklevi?
Yeah, the Winklevi. The Winklevi.
It's part of
Winklevoss
the NASA too.
Isn't Gemini a crypto platform that they own?
It is. Yeah, it is a crypto platform. You're right.
Yeah, and Gemini USD is one of the. Come on, Roy, help me out here.
I'm just thinking about space shuttles, man. It's NASA. It's from the moon landing missions. So I think the phase right before. So my 19-year-old would know that, but
sure. And then what about the KBW upgrade? They went from underperforming the market $6.50 to bumping it up to $7.50 and saying that this is actually going to be market perform. Tevis, what do you think about that?
Yeah, so I have a lot to say about that. Context. Beginning of January, on January 2nd, Michael Perito at KBW downgraded SoFi to a sell rating, basically downgrading them from a 750 price target to a 650 price target. His reasoning, I mean, he had a bunch of reasons. One of the reasons was even that the stock had gone up too much, and therefore, like, he changed his rating as a result of the stock action.
Well, so that's not entirely true. He changed the rating title. He said it was going to be a market underperform, because the stock had ran up. But that makes sense.
Yeah. No, it doesn't.
Why?
How does that make sense? Everybody would have sell ratings on Nvidia now because the stock ran up.
No, that's not true. If a stock gets overvalued, okay, then you can say that it's going to, in the next 12 months, not do as well as the S&P 500.
You think this guy had a full valuation model on his SoFi?
No,
I know the answer is no, because he changed his rating 3 months later, Tanner.
He's saying that a lot of the growth got pushed, or a lot of the future growth got priced in too early. And I don't necessarily think that
he had lower expectations than Wall Street had expectations for the full year 24 revenue and EBITDA.
Yeah, but that is
back in
different.
January.
I'm not questioning that. I'm just questioning what you're saying about the actual stock price change. So the stock price change was part of his analysis, not the price target, but the fact that it's going to underperform the market.
Sure. Okay. So this happened in January. Okay. He basically had pretty conservative, that's the nicest way we can put it. Estimates for revenue and EBITDA, stock price change. He basically lowered the rating from 750 to 650. SoFi had one of the worst days, I think maybe the worst day in history. It fell 13.9% on the back of this news. KBW is like a little boutique firm. It's not, this massive firm that everybody follows, but whatever, it doesn't matter. Now, on Thursday, April 4th, this same guy, and I think it was the same guy. There was Street Insider said it was another analyst, Tim Switzer, but TipRanks credited Michael Perito again. It doesn't freaking matter who it was. KBW, the firm, upgraded SoFi to a market perform back to a $7.50 price target. The stock moved up a solid 1%. And part of the reason why was because of the capital raise, basically the senior convertible notes for 2029. They basically argued that with less debt on the balance sheet, that it was a better financial position for SoFi. I don't really care why they upgraded SoFi again. I didn't care really why they downgraded SoFi. I'm sort of like glaze over a lot of these analyst reasons. The point is that in this course of 3 months, when these guys lowered the price target by $1, it fell 14%. 3 months later, when they upped the price target by $1, it went up 1%. And that I just think is not fun. Also, Tanner's t-shirt is
he back?
He's back.
Let's go, Tanner. Tanner's t-shirt, my bad. Okay, so I do think that the price target change is interesting. The fact that he went before to a market underperform and now he's saying market perform after the stock had dropped so much, that does make sense to me, right? There's risk reward. If the price goes down and the fundamentals stay the same, then the chance that it's going to have a better performance than the S&P 500 is a higher chance now than it was back whenever it was $11. So I agree with that. The $6.50 change to $7.50 change means that there's something fundamentally that has changed, or he thinks that there was going to be a dollar price increase between the times of January of 2025 and now April 1st of 2025, right? That 4-month change since he's made his first analysis.
I
don't know
if you read it. Did he say anything about the senior convertible note? Because that may be that piece, that 60 million.
I haven't read it. I mean, Tevis, I think, said something along those lines.
Yeah, I can't remember where I found it. I saw a snippet of it. I haven't read the full note, but one of the, and maybe if somebody in the chat knows, but one of the pieces was around the convertible note, basically arguing that they have a smaller amount of debt on their balance sheet and they're in a better financial situation. I had sushi actually earlier today. That's great.
Oh, yeah?
I did, yeah.
Good for you. Good for you. That's actually how I buy my t-shirts. I buy them in packs.
I'm just waiting for Gary Gordon to come into the chat and say hi.
Yeah. There's so many.
Honestly, I think he's a nice guy. I just think he's really wrong. And I think it's fine that he's not interested in even looking in Galileo, but I don't know. It's kind of like if we get a chance to talk about Tesla in the after hours, like there's a lot of Tesla stuff, but it's kind of like someone coming in, with Tesla and just completely ignoring full self-driving. It's like, well, you can choose to not believe in it and say that it's not going to make money because of this, that, and the other, and regulation. That's fine. But to completely ignore it and just not even pay attention to it, that is just disingenuous.
Oh my God, that killed me. Sorry, dude. These comments are trying to get Tevis and they're making me laugh so freaking hard.
Tevis
Tanner
died. It's
puts
just
his
the
name
two
and
of us
number
now.
on his t-shirt tags is
I'm dying.
is so
Oh my god.
Oh my god. There was another one. I thought it was inappropriate, but now that we're just all joking. Anyway, we have one of the funniest financial communities.
I saw one of these guys comment earlier. Tanner's the type of guy to use both hands to drink from a cup.
Yeah, I put it on the screen. I do that sometimes. I'll fucking yeah. The fact that I have this for my water is great ammunition, but whatever. I like the jokes. Okay, so we covered all the news of the week. You guys buying more? When are you gonna buy? Oh, Royce. Whoa, sorry, dude. What's up?
Not all the news. No, there was something that I thought was relatively significant. So, and it was maybe something that I guess it's not news of the week. It's news from like a month ago, but I missed it. So 3 weeks ago, Phil Rabin was hired on to actually manage and be the director of engineering of mobile at SoFi. And
Yes.
I mean, he's come over from Uber. He has this long resume. And if anyone has ever used the Uber app, like it is slick, it is nice, it is seamless, everything works well together. Uber Eats, he was also in charge of that, or at least a key cornerstone of that. And just if you read like his about me statement in LinkedIn, it is about the savviest that I've ever seen. And so I'm very like usually like you get a hire on LinkedIn and it's like, oh yeah, that's nice. And I didn't recognize the name, but I recognize the body of work for what it is. And so he is exactly what they need to be able to take their app from. Some people think the app is terrible. It's not. It's okay, but SoFi is going to benefit immensely from a amazing app that is has a lot less latency. That everything works well together. It's not as cluttered. It's just a whole lot more user friendly. And he is the guy to do it. Like he's done it again and again at Uber. And so I'm very excited by this. Yeah, that guy.
So he just joined a SoFi director of engineering for mobile. And at Uber, he was there 10 years. But I like this line that he wrote. He said, I led a transformative 3-year overhaul of Uber's native apps, resulting in a modernized architecture, enhanced user experience, and heightened reliability. Not only do I oversee iOS, Android, and backend teams, but I also drive improvements in monitoring and incident response. During my time in this role, I established a cohesive mobile roadmap, enabling effective feature development. My efforts grew the Eats platform team from 5 to 16 engineers, introducing modern tech and promote code reusability.
Yeah, just I went through his resume. I probably spent like 20 minutes on it, and I'm just like, this is the guy they needed. Just absolutely, they need better execution. They need to have not just a good enough app; it needs to be one of the best, and just blow all these other banks out of the water. So that helps them, that helps their users, that helps their customer recognition. And even though it shouldn't necessarily, it'll help Galileo. Other banks will be like, hey, we can't compete with that. We need these guys' help.
Okay, so really quick, I'm going to change the topic. Stephen Fiorillo. Everyone keeps asking about this guy. He'll be back. Okay, we're in touch with Stephen, but he's just working right now. He's really busy. He doesn't have the time. So, but he'll be back. So everyone thinking that he's gone forever, don't you worry. He's still posting Seeking Alpha articles and such whenever he gets time. But yeah, he actually just put one out on Square. He wants me to do a video on it because he's kind of anti that company. So I'm thinking maybe like title it like the Gary Gordon of Block. This dinosaur doesn't get this growth story. But yeah, what do you guys think about that title?
Well, I think that's really important. Esteban,
your mic is gone. Go ahead.
Can you hear me?
Yeah.
Yeah, I think it's really unfair to Esteban, and he's absolutely right on Block. Not just because of the CEO either. It's a good company. It's interesting, but man, yeah, with Dorsey at the helm, forget it.
Tevis, you all right, buddy? Oh, okay. Sorry about that. I see it. It's all Rat Pack. He started this, you know.
Dude, it wasn't even that one. It was Capital Exotics.
What? This?
Yeah. Yeah.
That's what World of Warcraft.
Sorry, it was World of Warcraft. I was not even putting it together. Dude, I'm thinking about the makeup company Elf, and I was like, what the heck is it?
You're too deep. You're too deep.
I'm too deep.
All right. What else do we have to talk about?
Dude, let's go into the freaking after hours, just making an extra long episode because I want to talk about Tesla.
We can we've only been here for 40 minutes.
Yeah.
I guess you asked a question and I rudely interrupted with Phil Rabin. But as far as like what are we doing with our current positions? Are we still buying? Are we still adding? For me, I can answer that. I was going to break the streak this week. Literally on Friday, I'm like, I've not bought all week. I'm getting kind of lower on capital, and I was looking at my ratios, and I'm only willing to go up to a certain allocation on all non-Palantir positions. If it runs past that, so be it. And so SoFi, partly because of the benefit of the price action, I've been able to add a lot more than I expected, but it's getting to the point where I can't add meaningfully anymore. So I've added very selectively. I only bought 10 shares in the after hours on Friday just to keep the streak alive. I'm probably going to finish out that position and just call it a day this next week. I might add a little bit here and there, but it'll be like 10 shares or a leap here or there. No big deal. But yeah, I'm basically at that point where as far as my risk to reward, like I still believe in SoFi. I've got a very nice size position, especially if it runs up. But I need to obey my own rules that I've set for myself and not fear like, oh man, look how cheap it is. It can stay cheap for a long time. I'm not expecting that. I think that we'll see the typical SoFi pattern in earnings. And I really think that there's a lot of people that are sleeping on the tech and lending platform, not lending, financial services platforms. So one of these times we'll break the cycle. I don't know if it's this time. I'm not betting on it necessarily. But I will say this. I have some short-term positions as well, some calls that are out just 3 months. I usually don't do that. I have done that in the SoFi. I'm not saying anyone should follow me. Do your own thing. But that's where I'm at with SoFi.
I'm curious if you were to start building a new position, what's at the top of the list? Is it still Nubank?
Just kidding. It's Nubank. Yeah.
Wow.
It's Nubank.
Oh, okay. That is funny.
Yeah, no, I absolutely. So where I'm at, I'll have money coming in here and there, but I'm pretty locked into my positions right now. There's a few that I can trim, but mostly just waiting. And so Robinhood, where I'm at with that's the 1 year position. I hit long-term gains in my non-tax advantage account. The middle, towards the end of May, that's when those begin to hit. And so I'm probably not going to sell any more Robinhood until that time. And it just depends on the price. Like if Robinhood goes back to 14, I'll probably buy more at 14. But it could run the other way. So yeah, but when I start that new position, once I have Tesla, we'll talk about Tesla in the after hours where I want it to be. And I need probably 2 months, maybe 3 months on Tesla. That's when I start adding Nubank. And I've just decided, like, unless something changes remarkably, it's going to be Nubank. Like, there's no doubt in my mind. I just need to be in that company. I can't help what the price is, but I'll buy a chunk and then I'll just add to it probably every other week, just a certain dollar amount until it gets where I want it. And that might take the rest of the year. But yeah, Celsius, honestly, like if it was falling a good bit, and Tevis mentioned it bounced back up. I didn't check it today. I would love to be in that company. I would like to get that back in like $60. I would seriously start buying at that point. But where it's at right now, I'm like, I can't touch it. So
let's talk about the rest of this in the TTNR After Dark show.
Yeah, we'll talk about it. But did you buy any SoFi this week, Tanner?
No, not yet.
You didn't?
No.
I bought Leaps today. I bought 2026 Leaps.
I've got a lot of SoFi. Like people like to call me the SoFi bear. It's like I put a lot of money into this stock for me, for my portfolio. I mean, the TJs walking around would say I don't have enough, but not everyone plays in that league. I'm only can play with my, the size that I have. So I wish I didn't say that. But yeah, I'm looking for other other great deals, and honestly, I'm starting to look to build a position in Shift 4. That would be really cool. I'm not over the fintech in my portfolio, and Shift 4 is such a slamming deal, and I want to talk to you guys about that because
it is a steal right now. I didn't realize that until Jeff Jingis was starting to crunch out some numbers. I'm like, okay, I've been sleeping on that. I've seen a couple other people mention that too. We'll talk after hours, mostly Tesla though. But I wouldn't mind talking Shift 4. Like that one is the only other fintech other than Nubank that I'd be interested in adding. That would be, it's not even on my short list, but I'm very interested. So we'll see.
These comments are wild tonight, man. I can't take
Dude, my name is not Tanner Milkman Manson. Don't call me that. I'm not the milkman.
Can I read some of these? Tanner's the type of guy to bring salad to a barbecue. Like Tanner, hold on. I died at one.
I saw one that said Tanner's the type of guy to bring alcohol to a party and drink water. That is actually me. Right now I'm sober for the year. So
Tanner drinks Diet Celsius Zero. It's a 10-calorie drink. Anyways, Tanner's the type of guy to hold his nose before going underwater. Okay, let's go into the after hours. I can't do this anymore.
Ladies and gentlemen, if you want to join the after hours show, it's down below. You can hit that join button if you're already subscribed. If not, we have our links in the description down below. It's just a measly $5 a month to get all this beautiful content about what the other plays that we're making in our portfolio, talking a little bit away from SoFi and fintech, and mainly about big tech and other stuff that we're buying. So thank you all so much for watching. Really appreciate your time. Tevis, say bye for now.
Bye for now. I can't. Tanner, get me the fuck off.